Okay. Hi, everyone. I'm joined here by our senior executive of commercial banking, Lesa Cox with Broadway, and Hanna Contreras, who is a small business specialist, and they're going to be talking all about understanding and building your credit. So just want to let y'all take it over.
All right, thank you. Hannah, I'll let you manage the PowerPoint while giving just a little overlay of how we're going to address this. We have a PowerPoint presentation that has basically two segments. The first part is about what goes into a credit report and all the things that don't go into a credit report. And then the second half is about how to build your credit, how to repair your credit, or how to protect your credit. So Hannah is going to go through the very first part about what is actually in a credit report and how those scores are devised and everything, because there's a plethora of different ways to score credit. All of them are pretty close most of the time, but they do have different nuances. So Hannah, I will let you go ahead and begin with your slides.
Awesome. Well, thank you guys again for coming to this, taking time out of your evening. We're super excited to share this information with you guys. Credit is such a funny little thing that impacts all of us, right? And you've probably heard, obtaining credit or your credit score or credit report, and it's all these different things. And so, just super excited to share with you guys some of the basics so that you are more empowered when you're going out, when you're checking that credit report or you're looking at your score, that you can hopefully have a little bit more insight into what all goes into that. So a credit report, we've all heard about it. The credit report shows all sorts of information, right? So it's going to have your information, who are you? It's going to talk about your debts and some bills, your public record information, applications for new credit and inquiries. You guys might hear that. And so what that really looks like is, you're going to have your credit history shown. So if you had a mortgage, you'll see it, and you'll see who you have that with, and maybe a contact number for them. You'll show the beginning balance, what you guys got the loan for to begin with, as well as what the balance left on it is. And you'll also see, are we on time? Are we doing good, or are we behind? And it'll tell you, we're 30 days, 60 days, 90 days. And so that stuff is really important to keep an eye on, of making sure that you are staying up to date with some of that. Your student loans, if you guys have student loans, will show on that. So all sorts of information, your autos, your credit cards, all of that shows on this credit report. And so you're probably
Hannah,
wondering, what is an inquiry? Yes.
we have a question through chat.
Oh,
The question
awesome.
the
Can you
question
read it?
is, would your rental history also show, like apartment renting and such?
I think it depends on if the apartment or your landlord reports it. So not all agencies have to report it. And Lesa, you may know a little bit more on this than I do, but I believe it just depends on if they report it to the credit bureau or not.
It's very rare that they report good history on the credit report, because it's an expense to them, so they don't do it. But you can guarantee that if you have a bad rental history, or you left an apartment owing money, it's going to be on your credit report.
Yep. So great question. It's a really, really, really good question. Any other ones? Nope. Okay. So let's talk about who decides what our credit score is. Well, there's 3 nationwide credit reporting agencies. So there's Equifax, Experian, and TransUnion. And you'll see this in all sorts of things, right? You may see a lender or an agency pulling all 3. You may see somebody maybe pulls TransUnion. It just depends to whatever agency is pulling that and whatever their need is. But those are the main 3, and we'll get into how resourceful they can be for us in just a little bit. Okay, so what is our credit score? We talked about the credit report, right? What it is, what's on it, had a great question about what could be on it. But what about the credit score? Well, the credit score, it's something that's going to determine your credit worthiness, which is interesting, right? It's basically telling us how reliable is this person to pay back their debt, right? So it's a number that's based on the information in the credit reports, right? So they take that information that we talked about earlier, and they put it into an algorithm for this credit score. It predicts payments of bills and debts or debts as such. And then people with higher credit scores are likely to get better rates on things because they're presented as a lower risk, right? So somebody who has history of 10 years, who's never missed a payment, and has low utilization, is a lower risk than somebody who maybe has had some challenges and missed a couple payments. And so that's where that credit worthiness comes in on the credit score. So what is good credit? So you'll see at the very, very, very top, we have 800 to 850. That is exceptional. And that's, just on top of it, doing what they're doing. Very good. That 740 to 799 is same thing, right? We're not missing payments. We are keeping our utilization, underneath that 30% or so. And good is where a lot of people land, right? That 670 to the 739. And that's a great place to be, right? Especially I heard some people saying they have newer credit scores, right? You guys don't have that credit history yet built up. So you may find yourself falling in this good category. There's at 580 to 669, and then poor again is 300 to that 579. And so wherever you land on this, don't worry. We're going to talk about some ways for you guys to see what goes into it and how we can fix it if there are any sort of credit blemishes. And this is something we would call FICO, right? Your FICO score. So you guys may hear that out and about. Okay, so 5 factors of your FICO. And this is really important because this is going to help us be strong with our credit, know how to utilize these factors to give us the best credit we can possibly get. So you'll see a big chunk is payment history. So it's typically 7 years that you'll see payment history. And that's just making sure that you're paying on time, right? Here's your credit line that you've had, the life of the credit. And has there been a missed payment? Has there been multiple missed payments? That would all show up in this payment history. Accounts owed. This is what I typically call utilization. And it's how much balance is on each of your credit lines and how much you're utilizing it. And you typically, it's funny, it says 30%. A good rule of thumb is always trying to keep each of your lines, so anything that's revolving, under 30%. So they kind of match, which is fun. Length of credit history, you'll see that's at 15%. For some of our newbies that we're talking about, they're new to credit. This one hits you and there's nothing much we can do about it. But for any moms out there, anybody who have youngins, this is good for you guys to know. Start helping your kids, early on. They can sign on to your credit card where they maybe don't have access to it, but you're helping build that early. Or maybe you right when out of college or right out of high school, you guys are helping them get into credit cards so they can start developing that credit history. And it just helps, elevate them in the future. Credit mix is that portfolio. Somebody was talking about it, having a diverse portfolio and the different types of credits that you may have. So some revolving and some that are more of a term paid off. And then new credit, right, is that 10%, just seeing that new credit that you guys are obtaining. Do we have any questions on the 5 factors of FICO? And I can't see if anybody's chatting. Lisa, will you let me know?
I'm watching, yes. No questions so far.
Awesome. No questions. Okay, so who uses a credit report and the credit scores? Well, the most obvious is financial institutions, right? So when you guys are looking to get a mortgage or an auto loan or personal loan or even a credit card, we're going to be pulling that FICO. We're going to be looking at your credit score. We're seeing the credit worthiness, but we're also looking at the credit report, seeing what's on there, just, doing a real nice look through and a review of all things credit. Some landlords, right? I know we talked about if we rented, do they report it? But some landlords will pull your credit prior to approving you to stay in their apartments, their homes, things like that. Utility companies, another one that's a lot of people don't realize could pull your credit. Some cell phone companies can also pull that. Insurance companies in some states can also pull it. Your employers, I know for us working in finance, they absolutely pull our credit when they do the background check. And so some employers may actually pull that for you guys. And then just some state agencies and other organizations could pull it or, review your credit reports. And they would, of course, let you know prior to doing all of that. So some of these are fun. I didn't, it's not something that you necessarily would think of, the cell phone company pulling your credit, right? But it all makes sense depending on financing and stuff like that of what they're looking for. Okay, let's see.
Yeah. Hannah, can we go back? I want to add something that impacts almost everyone here, whether they have credit built up or not, and that's the insurance companies. Insurance companies will use your credit score for you or against you, and they're allowed to do it. So even though this is not a contractual debt, they can look at your credit score, they can look at your credit report and determine whether you're going to pay their premiums on a monthly basis like you promised to, or whether they're going to have trouble collecting and possibly have to drop your policy. So everybody has to have car insurance. So this is another reason beyond just having debt capacity to work on a good credit score, because it's going to hit you with the insurance on your car. That's the first thing, because we all have to have them.
Yep, that's a really good point. It's something we all have, and yeah, it's again, things you may not think about when you're thinking about your credit and your credit score. All right, let's see. Okay, so getting your credit score. How in the world do we, figure out what our score is? How do we get our credit report? What does that look like? I heard somebody say Credit Karma earlier. That's a great way that you guys can monitor what's going on with your accounts. I would say that if you guys are using Credit Karma, still take advantage, and we'll talk about this on the next slide, of your free credit report, just to make sure that everything is matching up and everything looks right. Sometimes Credit Karma might have something that differs from the actual credit report. So, okay, so credit card statements or websites will provide that credit score for you. Some nonprofit organizations, FICO or Vantage Score, they will also utilize those. And then, of course, you can always go on to Experian, Equifax, and TransUnion to see your credit scores. I know a lot of credit card companies are doing it. If you guys use their online or their mobile app, it shows it. A lot of banks are getting into it. I heard somebody bring that up earlier, or that they can show it. So a lot of ways to access your credit score. And then you also have some rights. You have rights to at least one free credit report every 12 months from each of the 3 agencies. So that's 3 credit reports, at least 3 credit reports each year. And then you can also go to annualcreditreport.com to get those for free. And let's see. Oh, and something that's super interesting, that when we think about credit and we think about, impacts, we're talking about maybe we're missing payments or we're going to be a little bit slower, medical debt, right? So some of the hardest times and toughest bills that come to us are from medical, right? So that medical debt really does hit hard. And so something that is really good to note is that it will not be reported typically unless it's unpaid for 180 days. So it gives you some time to resolve some billing issues, make your payments, figure out your arrangements to get the payments made. But something to note, because I know that can always be a stressor when something happens and let's say you have to utilize an ambulance or you're in the emergency room, and on top of your health and all that good stuff, the last thing we want to think about is, oh my gosh, the financial impact. So really, really good to hear that, you have some time to figure that out and make those arrangements. I feel like I talked at the speed of light, but I do want to open it up and see if anybody has questions on just the first part of what we went through. Nothing? No questions?
Okay, Hannah, would you back up one slide? I wanted to mention something on that annualcreditreport.com. When you're monitoring your credit, like you could go on and you could order Equifax, Experian, and TransUnion all in the same day, and you could go to Annual Credit Report all at the same time and get all 3 reports. But then you're stuck for 12 months. You can't do it again. So when you're looking at your credit reports from these resources, look at one at a time, kind of like set a schedule. Okay, I'm going to check annual credit report, and I'm going to get Equifax this month, and 3 months from now I'm going to get Experian, and 3 months from now I'm going to get TransUnion, so that you can actually kind of keep a rolling availability of those credit reports and not be dependent on the scores that are given on your bank statements and that type of thing, because those are they're very loose compared to what you're going to see on the actual credit reporting agencies. So they give a good indication, but it's not the score that you can count on, that you know that's what my score is, because it's a blended score. So that really, and all three of the bureaus have different ways, different algorithms that they use to provide scores. So even within the three bureaus, you may not see the same thing. So that'll help you understand how those scores are kind of blended that you see, when you can pull it up every month. So that's a good habit, just to kind of spread it out and not do all of them at one time.
Absolutely. I definitely agree, you guys. Spreading it out and always double checking it. If you use your bank statements, your credit card app, or Credit Karma, Lisa's exactly right. Always go back and double check it to the actual credit report. Let's see. Anything else, Lisa, that you want to add on that first part?
I don't think so. I would really love if you continue to manage the PowerPoint. I'll just tell you.
Absolutely, yes, ma'am.
Okay. All right, I'll take it from here then. So now we're going to talk about how we build credit, how we protect our credit, and excuse me, and how we maintain it over time. So we're going to park on this screen for a while, because there are things in here that are correct, but all of these are correct, but you kind of have to put the right slant on it. Okay. So when you're talking about building credit, first thing on here is get a secured credit card. And what that means is that you put up money. Let's say you want a $500 credit card. You have to put $500 up in a savings account with that company, let's say Citibank or whoever, with that company to collateralize that card. So whatever limit you want on your credit card, you have to put in that much cash. That's not a bad thing, but it doesn't give you a whole lot of lift on your credit report, because the credit report notes that it's a secured card, which is a subcategory of credit cards, not primary category of credit cards. It's not given as much weight when it's a secured credit card in helping your score. So you just need to know that and have you can still do it. Just know that that's the expectation. It's not going to immediately give you a big lift because it's a secured card. Now, there are companies that will do a secured card, and they'll have terms like it'll be secured for 12 months. If you use the card and pay as agreed, they'll release the funds and it'll be an unsecured card. That's a good way to go. That way you don't have to open another card, but you built this history. You've got over a year of history with that secured credit card, and now it's unsecured, and then it's going to begin to really give you the lift on your credit report and your credit score. Does that make sense? Okay. A credit building loan, these are few and far between anymore. There used to be such a thing in banks. It's not as prevalent anymore, but there are online sources, online banks that will do these credit building types of loans. The terms are typically pretty hot. The interest rates are very high, and they're short term. So you have to be, if you go into this type of product, you have to understand what the terms are, and what your payment's going to be, and that you can truly afford it to get a loan just to build your credit. A bank would want a purpose for the loan other than credit building. Banks used to do small lines of credit, and Hannah, I know that we do some of those for small business. Is that correct?
Yes.
Okay.
And so, we have personal as well.
Okay. And what's the limit on those, the unsecured?
Unsecured, I believe the maximum you can get is about $25,000.
Okay. And what about the smaller ones that we have right now? We were talking about something that was,
so you can have
we won't get caught up in that. Sorry. Okay. So you can get a credit building loan. You'll find a lot of those online with online banks. An authorized user, I'll give you an example of that. When my daughter went to college, I had a credit card, with Bank of America, and I added her as an authorized user so that she would have her own card with her name on it and she could use it, but she wasn't obligated to make that payment. I was obligated. So that worked very well. She was very responsible. But when she went to buy her first home, they said, "Well, you've got this credit card that's got a limit of $20,000. What's this?" And so she called me and she says, "Mom, what is this?" I said, "That's the card that you used during college." She said, "Well, you got to get me off of there because it's hurting my chance to get a mortgage." I said, "Okay, no problem." So all I had to do was make a phone call, but it will report in a way that makes you obligated, look like you're obligated when you're actually not. So being an authorized user is, if you can get someone to do that for you, it's a good way to do it. But then you're also impacting the person that owns the card. Questions about that particular product, the authorized user? Okay. Get a cosigner. Many times this is a family member. Typically more than half the time it's a parent or maybe a brother or sister, but it's a good way to go as long as you are comfortable with that situation with, whoever you're signing on, because if you don't pay, they're obligated. You can't, there's no way that you can keep them from being obligated, but both are obligated. And if you don't pay, they're going to have to pay. And then credit cards at stores and gas stations, those are typically easy to get, and are not as concerned about lack of history rather than bad history. They're harder to get if it's bad history, but if it's lack of history, they're pretty easy to get. And then this last one, I heard someone talking about their emergency fund and saving for long-term goals, making a large down payment and negotiating a loan for the balance. This would apply more like a car. Let's say you wanted to buy a $15,000 car and you had $7,000 saved for that purpose. Then that's a large down payment. So you could negotiate a loan for the balance. They'll even offer you a loan for that balance. But with lack of credit, either a larger down payment would probably be, or a cosigner would be the things that they would want on a car loan. Any questions? Does anybody have any experience with getting the store or gas stations? I know that Hannah did. Okay, Hannah, we can move on. Okay, to maintain your credit, it's pay your bills on time and as agreed. On time means just what it says. You make it at least by the due date. You don't get extra points for paying it early unless you're paying it off, but you pay it by the due date. Now, here's the caveat to that. It won't be reported as late until you're actually 30 days late, but you're going to get that significant hefty late charge the day after the payment due date. So that's the penalty. But your account has to be actually 30 days late before it's reported on your credit. Gives you a little bit extra time, but you pay that really high late fee. So it's better just to pay it on time and the amount that you're supposed to pay. And then continue to pay down your debt balances. This is always good. You should have credit for a purpose. And when that purpose is complete, that debt should be paid down. It should be gone. So for example, if you need to buy school clothes, for your children, and you have to put it on a credit card and you've got, you want to spend $250, that's probably unrealistic. Let's say $500. And that should at least be finished by the time that you have to buy clothes again. That way you're not putting debt on top of debt. So if you can just keep your credit for particular purposes and pay it down accordingly, that's going to help you keep those debt balances low. And the proportion of the credit you use as compared with credit limits. So say, for example, you have a $10,000 credit limit and you owe $5,000 on the card. Then you're at a 50% utilization rate. Anything over 30 begins to have a negative impact. And the more it goes over 30%, the greater the impact. Now, this is where you'll see a lot of times Credit Karma will say, hey, you can reduce your utilization if you get a new card. Yes, that's true. You can, because they're going to add that availability to the amount, to the other cards that you have. And then your utilization rate will go down. But if you use that card, then you've defeated the purpose. Does that make sense? I don't want to go past this one because this one is so frequently, it's so frequently used with the online companies. Okay, I think I have a new message here. Let's see. What about credit cards from stores like TJ Maxx or Nordstrom? They're fine. They do help build your credit because they're unsecured, and you just have to make sure that you try to pay those off every month, because the interest on those is extremely high. So if you can pay them in full when you use them, that's going to help save on interest charges. It doesn't necessarily do a whole lot for your credit score immediately, because the best thing that the credit reporting agencies can see is an account that has a balance, that's paid down routinely, on time, and as agreed. So when you pay something off every month, then it doesn't build true payment history. So it's still good to start with those, but you'll also need to be working your way to a Visa, MasterCard, or one of the major credit cards that you can carry a balance and not pay such egregious interest, and pay it down over time, which is what that's paid as agreed. Okay, the next one is don't apply for too much credit. That goes hand in hand with what we just went over. There's no real measurement here. It's real easy to borrow more than you want to. Well, more than you want to, or more than you should, because credit card companies will, give you as much as possible because they want you to pay the interest. So, it's all up to you. You have to apply for anything. So if you don't apply, you don't have to worry about it. And then check your credit reports and regularly dispute errors. We went over that to some degree on the previous slide. Questions? All right, let's go on, Hannah. Okay, here are ways to repair and improve credit. We've talked about getting your credit report. It's what you don't know will hurt you. That used to be on a news evening news. They said what you don't know will hurt you. So this is true in that case. Knowing what's on your credit report only helps you. You have the right to dispute and correct any errors. When you dispute a charge, first of all, it comes off your report immediately for a 30-day period, and that gives the person or the company you're disputing against, it gives them time to provide either the evidence of what you charged, or to say no, this is wrong, or whatever. They have to respond, and once they respond, it either goes back on your report or it's corrected. Most of the time, it's really hard to win a dispute, but it's not impossible. So if you know that it's something you did not do, then dispute it. And that includes fraudulent charges that don't get caught. Particularly be looking for those, because they can sneak through and you don't even know it, and it's hurting your credit. And we're back to pay all of your bills on time and as agreed. I think we've given that enough. Use as little of your credit limit as possible. That's talking about the utilization rate. 30% or less, and that's the total of your availability. 30% or less is what you want on those combined cards. And keep old accounts open if you can. If you keep a card open and you don't use it, eventually the vendor will close it. That is not as painful to your credit report, because it will show closed by creditor. And it doesn't impact your score negatively as much as you closing it. But keep them as long as you can, just knowing that at some point the creditor is going to close them. Apply for credit only if you need it, and negotiate different terms. Now, there are very few places that you can negotiate different terms these days, particularly with interest rates being as high as they are. It never hurts to ask, what can I do to get a lower rate? Or what can I do to get a longer term? Or a shorter term is usually not a problem. But if you need terms that are different, it never hurts to ask. And you never know what company, or car dealers are particularly good about negotiating. They negotiate everything. So you have to really be ready to negotiate when you talk to a car dealer. But that's a good example of who will actually negotiate terms. Like but if you call the bank and you say, I don't like this rate, it's going to be, well, we can't offer you anything any lower because rates have gone up. There's very few negotiating points on bank loans and credit and national credit cards. Okay, Hannah? Okay, we're going to use caution when we do these things. Debt consolidation. Once you start having some credit, you will receive dozens and dozens of offers, especially if your score is reasonable. If it's 680 or above, you're going to get letters offering you so much, saying you're pre-qualified for a certain amount of money to pay off all your other debt. And, they're going to tell you it's going to be this great rate. And it could be a decent rate depending on your credit score, but it doesn't really address the underlying cause of the debt. And that is, your spending habits would typically, unless there's medical, we have to have consideration for that. But if you need to consolidate your loan just because of your credit, consolidate your debts for your credit cards, you really need to look at the underlying cause. Why do I have this debt? And will this consolidation really help me? I know many, many times we see this not only with individuals, but with businesses. They take a loan, put all their debt together, and 12, 18 months down the road, they owe just as much as they did before they got the new loan. And so now they've got the old money to pay off and the new money to pay off. So it's a slippery slide on the debt consolidation when you have access to those funds again. But if you could do that and be very, you might even want to take the hit and close the cards, just close them so that you aren't tempted to use those again. Not all your cards, but everybody needs to have a credit card to work from. But keep the best one. But you really have to think this through and make a personal decision about, is a debt consolidation loan right for me? Why do I owe this money? Now, it could be car repairs that you couldn't do anything else about. There are legitimate reasons that you could do this, but you just have to give your own personal case, to decide whether to do that. And then debt settlement. This is, I won't say it's a total scam, but your debt settlement companies will work with the creditors to accept a lower payment and settle the debt. And what that means is if you owe $10,000, the debt settlement company will come in and say, okay, if we give you $7,500 today, will you settle on this? And the creditor says, yes. Well, what happens is at the end of the year, you get a 1099 for that $2,500 that was forgiven, and you have to declare that as income. So debt settlement, it's settlement, but you're going to, if you don't pay the full amount, you're going to get a 1099 on the portion that was forgiven. And that means you have to add it to your taxes. That will be counted as income on your tax return. Questions on that? Okay, Hannah. Credit repair scams. There's probably a much longer list than this, but we'll go down through these. A company promises to erase bad debt or remove your negative but accurate information. No, they can't. They don't have the capability. They can't do it. but they'll take your money and say they can do it. They promise fast and easy credit repair. There is no such thing. True credit repair takes time, and none of it's easy because you have to change some habits and identify the underlying reasons for your borrowing. If they offer to create a new identity for you, that's beyond scam. That's illegal. So just don't. I was surprised that was even on there because it's so wrong. And then they want you to pay up front. They're gonna tell you how much it will take based on how much you owe and how many creditors you have, and they want you to pay them up front before you get any benefit. So that's a red flag right there. And they're not going to tell you about your rights. They're not going to tell you how you can dispute or anything that you can do, to do anything other than what they want you to do. And when you start getting letters and phone calls about credit repair, that's a good indicator to you that it is visible that you're in some kind of trouble with credit. You're not making payments on time, or there's something that's reflective that you got a problem, even if it's just the amount that you owe. So that's why you get those letters. That's just a red flag to you that I need to sit down and figure out something, and then I need to talk to somebody and see, help me, And that's where someone like Hanna or I could, have a very private conversation about this type of thing. We've got this situation, and what are the options? What can you do in a legitimate way that's not going to cost you money, or get you arrested? Questions? All right, Hanna, let's go to 16. Okay, protecting your credit history. There's several things that you can do, and there's only one of these that has any type of fee to it, and it varies by credit agency. You can get fraud alerts put on your credit history, where if they think that if the credit reporting agency thinks that fraud has been attempted on one of your accounts, they will alert you and say, hey, somebody tried to open this in your name. Was it you, or was it, and you can say yes or no, and take care of things early on before it goes any further. Extended fraud alerts will last 7 years. Somebody who has had their identity stolen or something of that nature would need that length of time to to make sure that nothing's going on their credit that they don't know about. And then the credit freeze can be done for a year, and that's exactly what it sounds like. It's a freeze on your credit. It won't give anyone a report. And then the credit lock is the freeze. You can get a report. You just have to go in and unfreeze and then refreeze. And then on a credit lock, that one charges you a fee, and no one can get a report. Does anybody have any questions or any personal experiences about any fraud or anything of that nature on cards or any type of account? Well, I had one just happen to me just in the past 10 days. I have an Etsy store. So my credit card gets used in various capacities in my Etsy store. And I got a fraud alert from Bank of America, and it gave me the description of the company, or gave me the company name, and it was out of Switzerland. I said, well, I know that's not me. And so, I said so. But when I looked it up, when I looked the company name up, it's this company in Switzerland that shields the true identity of the transaction owner from being visible. Like somebody, like John Doe was in France trying to charge something on my card, but all I can see is that front company. And this is done by the Swiss government because they're so great at protecting the identity of their bank clients and everything. I was just totally shocked, but I had to get a new card. So now we have a question. So let me look at it. Does credit score go down if you don't use a card you have? It won't go down, but eventually the card will close. So what if you want to keep it and keep that going, once a year, just charge something small on it and it'll stay open. But your credit score doesn't go down just for lack of use. That's probably a great support for all your other credit that's sitting on it. If you have that availability, but you're not using it except, very infrequently.
And Lesa, just to add, if you guys get store cards, if you don't use it, they a lot of times they have the right to limit, and so that could affect your credit. If you have 5,000, you never use it, and the store says, you know what, we're going to drop it down to 2,500. That can happen. I don't think I've ever seen it with like a Visa of some sort, but those store cards, they do have the right to lower the credit limit at any time, and then you would see that reflect on your credit report.
Hannah, I'll add to that. You probably weren't old enough to go through this. When we had the turn down in 2007, 8, and 9, when the mortgage industry went bust, bank cards were going in and lowering limits automatically, just automatically. Didn't matter how good of a payer you were or what. They were afraid of the risk that you would lose your job or you'd come upon a hardship, all those things. And so they just took drastic steps and just took away available credit. And it was one of the things that prolonged the recession because credit had been diminished, so people couldn't buy as much. So it was a very painful time. They can do it, but we don't want to see that happen. But they do have the right to lower the limit at any time for any reason or no reason. Okay, how would lowering the credit limit hurt your credit score? That the utilization, let's say you got $10,000 of total available credit to you, and you owe 2,500 or 2,500 of that 10,000. So you're below 30% on the 10,000. But if you lower the limit or the card closes, then let's say you close a $3,000 card. Now you got only 7,000 to utilize, and you owe 2,500 of that. So you're over 30% in your utilization, which causes your score to go down. It's a real balancing act. It's just, there's so much that goes into it that it's hard to keep up. Did I give an answer that gave a good explanation?
Yeah, definitely.
Okay.
I kind of actually have a follow-up question to that too. Is there any kind of do companies typically give you a warning before they lower your limit, or do they just are
Typically
they
not. You get a
that's
notice
so
after the
scary.
fact. You get it
Oh,
after
okay.
the fact. Yeah.
Good to know.
The nice thing is now though, a lot of times they'll send you an email, which is much better than a letter. If you're signed up for, everything email and digital, you'll probably get those notices soon. But they're going to do it first and then tell you, because they don't want you to rush somewhere and get a cash advance or make a charge or something. They want to get it done first. Okay, Hannah, we'll go one more slide. I love this one because it's your credit history does not have to be your credit future. And that is very, 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 very true. I was talking earlier about how when you need to repair your credit, it's never easy and it's never fast. But fast is a relative term. You can really turn your credit around significantly, depending on the circumstances, how much you owe, that type of thing, in a 6 to 12 month time period. If you really buckle down, you can turn some things around. What you need to understand is, what is the problem? Is it I have the utilization is too high, or I have too many cards? So you have to have a copy of your credit report and understand that. Credit Karma Credit Karma gives you some, when you get it from there, it gives you some ideas on things that you could do to increase your score. That first one's going to be get another card if utilization is your problem, but think through that one hard and fast, but hard and long before you actually do it. But you can really make changes, very positive changes, in a 6 to 12 month period. It is possible. Has anybody ever heard of the snowball plan? Okay. Dave Ramsey is a financial guru that a lot of people listen to, and he first came up with this method, which is contrary. If you think about, let's say you've got 3 credit cards and one of them is at 19% and the other 2 are at 12%. Well, you automatically think, okay, I need to pay that 19% off quickly first. It's got the biggest balance. I need to pay it off first. Well, it's going to take you the longest, and it's going to be very hard to be disciplined about that. So his theory is do like a snowball. You start with the lowest balance account. Forget the interest rate, look at the balance, lowest balance account, and you do everything you can to pay that off as quickly as possible. Then the next lowest balance, you're going to take everything that you're paying on the first card plus what you're paying on the second card and start paying on the second card. So you're just, instead of paying one off and then just having extra money, you roll that money into the next card that you need to pay off it off faster. So it's like a snowball rolling downhill. It just going faster and faster. And if you Google snowball debt plan, there's probably even some forms that you can use and stuff out there. But it's a very good way to repair your credit history rapidly. If you have negative history, now it doesn't. If you don't have any history, different issue. So that's no help to you. But we've talked about legitimate ways that you can start credit in your name. Okay, that is the what is the next score? Next, there's one more page. I can't remember what it says. Questions. Okay, yeah. Yeah, Hannah, I'm like you. I feel like we've gone through this really quickly, but almost an hour, so not too bad. How else can we help tonight?
I actually had a question really quick. I've heard a couple of my friends kind of do like a credit transfer from one credit card to another. Is that something that is helpful or harmful to like your credit score?
Well, just transferring, if all you're doing is transferring, like you get an offer for a 0% for 24 months or 18, that type of thing. I'll tell you what, I use those when I have the opportunity, because if I can pay them no interest or 1.9 instead of 12.9, I'm going to do it. What you want to avoid is increasing credit by doing that, adding to. The increase could potentially hurt you. Potentially, it depends on your utilization. But using those special offers, there's nothing wrong with it if you pay them back the correct way and as agreed. That's the key.
And also, I would just add, if you're to close it, like you talked about, when you close those credit lines, it does impact your credit just a little bit. So I'd also just be mindful of, bouncing off what Lesa was saying, of taking on more credit exposure and not putting on more credit debt, right? Yeah. So keeping one open and then being able to manage both, right? Having double the amount, and just being mindful of knowing if you make that transfer, sometimes they may say they want you to close this, or if you guys do some sort of consolidation or something like that. So those things you may see will hit your credit just a little bit.
Awesome. Thank you so much. Hanan is asking, is the utilization percentage on each card or the total of the amount?
It's actually the total of the limits in a ratio with the total of debt owed. It's not per card, it's the total.
Thank you. Yeah, I was confused because I remember I had one of these cards, like 500 when I was in school. And then now I'm like, okay, so how does this work?
Yeah. They're sitting there as you come in, as you move into your dorm, right?
Yeah.
And there was another thing that said following on when you transfer to one card. And on did we go to
Yeah,
that?
I guess it was more like into about questions. So the utilization, even when you transfer them to one card, you still take all your credit limits from all the cards and have this utilization percentage, correct?
Yes, yes, it totals everything. So if you just do a transfer from one card to the other, the utilization rate stays the same.
So thank you.
All right. I've
Oh, I want to add something. One last thing, because as I was looking at this and I was getting prepared for the meeting, I thought of something that just really, yeah, just it aggravates me. Somehow built into the algorithms for credit reporting, men have an advantage, or yes, men have an advantage. So, for example, my husband and I, we've been married 33 years. During our entire marriage, we've had only joint credit, and yet his score routinely is 10 to 15 points higher than mine, even though it's exactly the same, exact same history. And that really chaps me, but it's true. So if you now this would only apply to joint credit, um, but everything that we have is joint. Yet he has a higher score, and to make it even worse, I'm the one that pays the bills. I mean, not financially. I'm the one that sits down and pays. I make sure everything gets paid. So it's like, dang, I don't get any extra credit. So if you happen to see that in your personal circumstances, don't be surprised.
That
That's really
is just
interesting.
frustrating. Go
What
ahead.
was that?
Didn't know that.
Yeah. I mean, I'm making the assumption it's their algorithm. I don't know how else it would work if it wasn't something to do with that, but I think it's discriminatory in a way, but I don't know that anybody that's fighting that battle. So
Yeah, that's absolutely insane. Okay.
in this day and age, right? One other thing, we were talking. I had lunch with Mia and the other day, and we were talking about banking jobs and how a banking job is a great place, to have an avenue into a professional company without having the when you see a job ad for a bank, it's almost always going to say certain degrees required. That's what they'd like to have. The reality is you don't have to have a degree for many jobs in a bank. I'll be honest. I did not get a degree. I put my first husband through college, not myself, which was, the error of my ways, obviously. And I've been able to have a very successful career and fulfilling career at a bank without a degree. Now, there would have been jobs within the bank that I could have gotten had I had a degree. Maybe it held me back just a little, but I still I still feel like the banking industry is a great place to work. They've got great benefits. You can get in the door without a degree. There's paths for growth either through sales or operations. So if you're ever looking for something and you think, oh, I can't work at a bank, I don't have the qualifications. Banking can be taught. Banking is just math. If you have a sales mentality or you have an operations mentality or that type of experience, if you're a customer service representative, the bank needs all of those skills. So you don't have to have worked with money. There are many, many other skills that we need that are harder to teach than banking. Banking is easy to teach. It's math. I don't know if any of you are looking for a job or anything, but I did, because me and I talked about that, I wanted to mention it.
It's incredible. Thank you so much for just sharing your expertise. Do you know if Broadway is hiring right now by any chance?
I don't I don't even look. So I could get back to you on that. I could look
Sure.
tomorrow and get back to you.
No problem. Well, yeah, no problem. Well, I just wanted to, I guess we'll just end a little earlier, but just wanted to say thank you to both you and Lisa and Hannah just for sharing your time and expertise, just sharing all this information. I know I learned a lot, and I'm sure everyone else on the call did too. I'm going to go ahead and stop the recording.